Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. It's 12 noon. We're halfway through the trading session, and so far it's been a steady start to this Monday morning. Benchmark indices are higher by close to about 0.3%. I'm Reema Tendulkar. With me is Nigel D'Souza. Hi.
Hi, Reema. Well, all focus on ICICI Bank for the time being. Yes, the markets are holding in the green, but post-market, I think that's going to be the crucial factor, and that's what's going to move markets in tomorrow's trading session. But keep a note on that, Mark, because for the second day running, the stock is gaining in an otherwise flattish market. Even in Friday's trading session, we ended with a cut of around 60 points odd, but ICICI Bank ended in the green. So we'll keep an eye out on those set of numbers. First up, let's run you through all the top stories. Then we'll get to all the stocks that are buzzing around.
With our movers and shakers segment and talk about the stocks which are buzzing in trade, and kick-starting this with pharmaceutical. Ikta, Lupin top loser on the Nifty. What's bearing down on all these pharma names?
Well, yes, I'll start specifically for Lupin, where the company's Nagpur facility, we understand from sources, is getting inspected by the US FDA starting this week. Separately, Credit Suisse has written a report on Lupin saying that they've seen massive volume loss in their diabetes drugs, which is Fortimet and Glumetza generics. So they have a neutral rating, but they've cut the target price to 770, and they've cut the FY 1920 estimated EPS by 5%, 20% and 14% respectively. Now, this is not the only reason why a lot of these stocks are under pressure. The main reason why a lot of the pharmaceutical stocks are under pressure is because of Trump likely to make a speech on drug prices. Now, remember that he was expected to make the speech last week, but it got delayed, and it is expected to probably take place this week sometime. And there is fear that nobody knows what he could announce, what the scope of it could be. And there have been statements from a couple of the government officials saying that everything is under review when it comes to the pharmaceutical space. So you know that nothing is out of bounds and what kind of structure he could be envisaging, because nobody is even aware, according to the Republicans and reports, of his current plan with regards to this particular drug pricing speech, and that's the reason why you're seeing a lot of these pharmaceutical stocks down and out.
Okay, all right, Ekta, thanks so much for that. But from pharma, I think we'll shift focus to some of these ID stocks. Reema, tell us about Cyient as well as Intellect.
Well, Cyient has actually been doing well ever since it came out with a strong set of Q1 numbers. And in the last few days, most of the mid-cap IT names have corrected, but not Cyient. So the company held an analyst meet on Friday, where the company indicated that there is going to be a business shift. So currently, it gets about 95% of its revenues from services and 5% from solution. Now, this mix is going to change. So in the next 3 years, they expect the solution business to scale up from the current 5% to 25% and eventually scale up to 80% in the next 10 years, which will be driven by the company's internal innovation program, partnerships, acquisitions, as well as people. On account of the investments that the company is making, they see 100 basis points impact on the margins. That said, for the near term, they reiterated their double-digit growth guidance for FY19 flat margins. One of the segments that's design-led manufacturing didn't do so well for the company in the prior quarter, that they expect to grow by 20% on an organic basis and 35% if you include the acquisition that they recently did. So continuing to maintain the optimism on Cyient. Intellect also came out with a very good set of numbers. So the company has reported a very strong dollar revenue growth of nearly 14% this quarter. Their margins have expanded to 8%. That's driving a profit jump. Profits, in fact, more than doubling to about 26 crore. Their pipeline is looking good. The order pipeline is at $521 million. They have 32 high-value active pursuits in the deal pipeline. I was listening into the management conference call. While they didn't spell out a particular guidance, they did indicate that they will continue to maintain the growth momentum.
Okay, all right, Reema, thanks so much for that. Well, on to the latest in the insolvency cases. Sources say that lenders to JP Infotech, they are still divided over the highest bidder for the company. Now, a day before the final voting is set to begin, Ritu Singh joins us with more on that. Ritu, if the highest offer is not good enough, what happens then? Take us through those details.
That's right. The Committee of Creditors to JP Infotech will be meeting today to consider the bid that has been placed by Lakshadweep, and that is a joint venture between Dosti Realty and Suraksha Asset Reconstruction Company. We understand that the bid that has been placed is close to 7,350 crore rupees, which also was brought down during the course of the negotiation from 7,700 crore rupees to now 7,350 crore rupees. Of this, we understand 4,000 crore rupees is what the company has offered for the land parcels and 1,200 crore rupees as cash repayment to the lenders. The remaining is long-term NCDs, and a very small equity stake will also be given to the lenders. But we also spoke to quite a few bankers, and they don't seem too happy with the bid. They still claim that the bid is depressed. Remember, the liquidation value of the company on account of the vast land holding that JP Infotech has is about 12,000 to 14,000 crore rupees, and the debt of the company is 10,000 crore rupees. So the lenders were hoping for a bid that would at least match the principal outstanding that has to be repaid. So the voting on this bid after it is discussed today will be held tomorrow, and that is when we'll know the outcome on whether or not lenders accept this bid.
Okay, Ritu, on top of that story, we'll keep coming to you for more updates. Moving on to Wockhardt. Ekta, that's down close to about 8-9% as we speak. While it's still a loss-making company, the losses have narrowed. So what could be the reason why the stock is sold off so much?
Well, it's fundamentally still not performing that well. So revenue was up around 18% on a year-on-year basis. The EBITDA also was just about flat this time, a marginal loss as compared to what they did last year. So there has been some improvement there, but the net loss continued for them because of the high finance costs. Separately, the company has approved fundraising via QIP up to 1,500 crores and an NCD of 1,200 crores. So most of the analysts are fearing that, fundraising indicates that the company is undergoing a possible cash crunch, and that's probably why they need to raise these kind of funds. Plus, there was no sort of positive update or no update at all when it came to the US FDA pending issues, and that brings you to the lack of information, which is also brought out by a lot of analysts. They've all stopped covering Wockhardt for many quarters now, simply because they don't hold a conference call. There is nothing beyond the press release which provides more explicit details in terms of the working of the company in order to take a collected information call on that particular stock. Separately, some analysts are raising concerns over some strong family representation in the company as well. Remember that it's not a pressing concern because that has always remained the case, but there is now the appointment of Zahabia Khurakiwala as a non-executive director and Dr. Huzaifa Khurakiwala, who is also reappointed on the board along with Murtuza Khurakiwala. So there is some concern that maybe there's too much of family representation, but the key issue for Wockhardt continues to be the fundamentals.
Okay, all right, Ekta, thanks so much for that. Going across to Sonal, she's joining in to give us all the stocks that are in the news. Sonal, over to you.
Well, these stocks are in news because of their Q4 results that they came up with last night. Indocard has reported a weak set of numbers. The revenue went down by 13%, EBITDA went down by 7%, and it was all because there were cotton prices which were fluctuating and also because of the GST concerns. Even their finance costs, that went up by 12%, and that's why the stock is red in trade today. BASF, another weak set of numbers. Both the agricultural solutions segment and the chemical segment underperformed. The revenue went up by 5%, but they saw a contraction of margins by 200 basis points, and that was because of higher costs. Even that stock is in red today. NOSIL, that is one stock that has reported strong set of numbers. The operating profit margins expanded by around 1,000 basis points. Even the profits went up by 1.5 times, and the company has been able to pay off all its debt, and that's why the street is cheering the stock today. Deepak Nitrite, weak set of numbers. The revenue went up by 6%, but the margins came in lower. That was because the other expenses went up by 29%, and even the finance cost, that went up by 10%, and that's why the stock is red in trade today.
Okay, thank you very much for that. Godrej Properties continues to do well, rallied on Friday, rallying 5% today. The company reported a strong set of numbers, good profit after tax. The company also raised 1,000 crores after diluting 5% equity stake by selling it to a GIC managed fund. We caught up with Pirocha Godrej, the executive chairman, to find out more about the quarter gone by.
During the year, we made a very concerted effort to improve our sales from existing inventory, because historically we've been very successful in launching new projects, and most of our focus has ended up being on those new launches. I think this year we wanted to ensure that an equal, if not greater, focus was put on sales from existing inventory, because those sales actually tend to generate higher cash flow and so on. So during the year, we saw a nearly tripling of those sales from existing inventory, and this year for the first time our sales sales from existing inventory was actually higher than our sales from new launches. We also had a strong year for business development. We added 12 new projects during the year. Those represent a total development portfolio increase of about 23 million square feet. 4 of those projects with about 6 million square feet were during the fourth quarter. So all in all, I think very happy with the operating performance during the year. This also allowed us to generate over 1,800 crore of positive operating cash flow, which in turn allowed us to reduce net debt by about 650 crore, while, as I mentioned, also substantially growing the company's portfolio.
Well, let's head straight to Anisha. She's joining in to tell us about JP Power. Anisha?
Well, yes, Nigel. Actually, the company results are improving, but the auditors have also given a qualified statement. It looks like the street is not really paying too much attention to auditors' concern, but perhaps to the improving fundamentals or the numbers of the company. Now, to talk about the numbers that came over the weekend, the revenue has expanded to 700 odd crores versus 680 crores. The losses have narrowed a tad bit to 170 crores versus 230 crores. The finance cost still remains high at 350 crores, but not to take away the fact that it has reduced year on year. If you look at the balance sheet of the company, it has remained pretty much flat year on year. So perhaps the major push of the positive sentiment is brewing from what is happening in the group companies, and what Ritu also gave us an update about JP Infotech, because other than that, the auditors are raising concern that the company has not made any provision for diminution of value as far as investments is concerned. They have raised red flags as far as managerial remuneration is concerned. They also talk about the fact that there are corporate guarantees that the company has given for Jayaprakash Associates to the tune of around 2,000 crores. So quite a few red flags that have been raised by the auditors, and they have modified their opinion for the first time, but the street seems to be enthused by perhaps the numbers.
Okay, thank you, Anisha, for that. Oil marketing companies are recovering from the day's low. So from the lows, it's seen a recovery of close to about 3%. If you pull up HPCL, IOC, BPCL, now all these stocks are in the green, and this is after Cogensis was reporting that the government will fully compensate our oil PSUs for the January to March subsidy losses. Remember, on account of a high crude oil prices, most of these oil PSUs will be struggling, and now it appears that the government will compensate the oil PSUs. The stocks are recovering on the back of that news report coming in. I think this is about LPG and kerosene, where that is the case. We'll try and get more color in. But Ekta, in the meanwhile, on hospital stocks?
Well, yes, hospital stocks are in focus because the Delhi government is likely to announce a policy to cap hospital profits on drugs and devices. Now, remember that there was a 9-member panel which was set up by the Delhi government on the 13th of December. This is after all of the overcharging cases that had taken place. Now, we do understand that the recommendation is to cap the profit margin at a maximum 50% above the manufacturing price or procurement cost, whichever is lower. It'll be interesting to see what kind of caps eventually come into place, and whether it would only be restricted to Delhi or whether it would be followed by other governments as well, state governments.
Okay, all right, Ekta. Thanks so much for that. Well, going back to Anisha, she has some stocks that are on focus. Anisha?
Oh, well, yes, Nigel. The first one on my list is PC Jewelers. You can't take away from that particular stock. Was up around 40% on Friday. Another 30% up move is what we have seen on PC Jewelers today. Of course, today the sentimental uptick is coming from the fact that the board has advanced the board meeting to May 10th versus May 25th earlier to discuss the buyback. Remember, the management had told CNBC TV18 earlier that they will not participate in the buyback. They did mention that they have cash reserves of over 1,000 crores. Let's see what comes out of this particular board meet. Till then, expect the stock to remain volatile. But moving on to the other stocks in focus, Sadbhav Engineering bagged an order for around 320 crores. The management told us earlier that they can expect a margin of around 20% on this project. That one was excited on account of that. Ruchi Soya, well, there were reports that Patanjali has made a very strong bid of around 4,500 odd crores, and that stock is up around double digits. Of course, remember, what comes to the investors is something that we'll get to know only later, but the stock is nonetheless excited. Lastly, moving to KEC International, that stock was down about 3%. There's a sentimental downtick because remember, 7 of company's employees which are stationed in Afghanistan have been kidnapped by one of the terrorist organizations, so that one is seeing a sentimental downtick. Back to you.
Okay, Anisha, thank you very much for that. PC Jewelers, 33% up as we speak. The stock has doubled in the last 3 trading sessions. Ujjivan has seen a sharp fall, down 6%. Abhishek joins in for more. Abhishek?
Well, Reema, Kotak has downgraded their recommendation on Ujjivan to reduce from add. While their target price is at 420 rupees per share, they have not reduced the target price or their earning revision in terms of while they are downgrading the recommendation on the stock. But what they believe is that BJP's manifesto, which includes an agricultural loan waiver of all the loans that are up to rupees 1 lakh, can have a negative impact on PSU banks and as well as microfinance players, and that can impact their repayment schedule as well as asset quality going forward. And also the fact that Ujjivan's recent price performance actually leaves limited room for the upside. I've done an analysis which shows that Ujjivan has close to 14.7% of its book as on Q3 FY18 in Karnataka, while its next peer, Bharat Financial, has close to 11.3 as on Q4 FY18 of its portfolio in Karnataka. Back to you.
Okay, all right, Abhishek, thanks so much for that. Well, let's run you through all the buzzing stocks we just covered. We have a whole host of them. So here it goes. Lupin, Sun Pharma, Wockhardt, JP Infra, Godrej Properties, Indocount, BASF, Nossel, Deepak Nitrate, Jayaprakash Power, hospital stocks like Apollo Hospitals, Fortis Health, Satpav Engineering, PC Jewelers, Ruchi Soya, KEC International, and finally, Ujjivan.
Okay, let's move on. The rupee has fallen to its lowest level since February 2017 on the back of dollar strength and weakness in many emerging market currencies. The rise in crude is also seen bad for the rupee. Lata with more details. Lata?
Hi, yeah, this time it's not really an India-specific thing. As you pointed out, it's more an emerging market, especially Asia emerging market phenomenon. The dollar strength has put pressure on several currencies. So the Thai baht is the one that's leading in weakness this morning. At one point in time, 0.7 down. The Filipino peso comes closest to India, that's 0.4 down. And even the rand and lire, they also trade off market, although their official markets have not opened. Both are down about 0.6, 0.5. Therefore, the Indian fall at its worst, 67.13 at the dollar's height, still works out to about a 0.35, 0.4 kind of fall. It's not fallen as much as others. It's a little worse than, say, the Taiwanese dollar, which is actually stronger. But these currencies are actually reacting, a lot of Asian currencies, to fears that the US may insist that China bring down its trade deficit with that country by $200 billion. While, of course, the talks were inconclusive when Mnuchin was there last week, the fear is that America, even if it got through half the way, would result in a substantial Chinese slowdown, and that would affect the entire penumbra of industries. As well, deficit coming down is extremely positive for the US dollar, and it is the dollar strength that is working on other currencies. Usually when India is part of a global move, the Reserve Bank doesn't intervene. So we had some dealers telling us that state-owned banks were selling dollars, but you know, they could be selling it for their clients as well. Normally when it's part of a global phenomenon, the Reserve Bank doesn't intervene, but you can never tell. The point is it went to 67.13, then came back to 67.09. It could be because of intervention. It could be because somebody thought it's a very attractive level to sell.